Good afternoon to all of you. I hope you've enjoyed your lunch. I'm sure post-lunch we'll try and make it as exciting as possible. But yeah, definitely very topical, to consider ESG in this forum. So looking forward to having an interactive session with the elite panelists that we have. Whenever we are ready.
Um, sure. Well, I can announce. Fantastic. Thank you. Thank you, and welcome back, everyone. Just a reminder, please use your headphones if needed. We'll be starting this next session with a fantastic panel on ESG, once a bonus, now a must-have. Today joining us, we have Matthew Pryor from Tenacious Ventures, Tim Neal from Data Farming, Ifran Malik from INQ Innovation Global, Cal Archibald from Beanstalk AgTech, and Lisa Fedorenko from Alberts.
Thank you, and thank you to the whole Wholesale Investors team, all of the delegates, all the guests and investors, startup ecosystem, all the corporate gov, all of you who have come on board. Welcome, and again, I'm really excited on behalf of Wholesale Investor crew as well as my own organization to be really hosting this amazing panel and very topical discussion on ESG as well. Just a quick introduction. My name is Irfan Malik. I am the global CEO of INQ Innovation Global, which is an open innovation ecosystem supporting companies, Australian companies in particular, scale to emerging markets like India, the Middle East, and rest of Asia, all with corporate advisory, investment raise, but also hand-holding them for various business and joint venture partners as well. The other hat I wear is I'm the president of Australia-India Business Council, based out of New South Wales. Really help, and associate vice chair, really helping companies across sectors and definitely startup because of my own involvement. I'm really passionate about scaling up and supporting startup ecosystem to connect, but also other corporates as well, where there is an opportunity to leverage and also bring in Indian investments as well into supporting Australian companies scale into these markets as well. So if you have anything around Australia, India, please reach out to me. Would love to talk to you about and how these opportunities, especially with the recent ECTA agreement, which we are working towards a free trade agreement, that's going to play out as well. So on that note, I'm pleased to welcome the elite panelists that we have. We have three guest panelists here with us in person, and one of the gentlemen joining online as well. Tim, you can say hello. I just want to check you are able to hear us and we can hear you.
Yeah, I can hear you fine. How am I coming through?
Excellent, Tim. Thank you again. So what an amazing topic we have. Obviously, we had to tweak this a little bit as well, where we started off more focusing on ag tech, but and precision farming and future of farming. But what is really pertinent is ESG, the whole environment, social governance, where more and more organizations, globally, are looking for conformance and compliance, more even in terms of acceptance and adoption as well, especially in the global market scene. So I just wanted to take this opportunity essentially to position that ESG is not only the topic for the corporates, the gov, but also very pertinent for startups as well to consider. And of course, from an investor perspective as well, it is high on the radar in terms of ESG conformance. At least having something on the pitch deck that startups or organizations are looking to consider down the line, even if it's not their immediate priority, but having that on the radar is definitely seen as favorably. So on that note, let me kick off this session. And what I'll do, I think we've already had an introduction, but still, I would love to hear a personal story as well, their own version of, just probably introduction about what you do in your organization, but also on a high level touching on how ESG is important for you and your organization as well. So let me start with Lisa, if I can get you to introduce yourself and your organization and how important is ESG for you all.
Awesome. So hi, nice to meet you everyone. My name's Lisa Fedorenko. I'm the investment manager for Albert Impact Ventures. So Albert's has a really long history, 138 years. So one of the oldest run businesses in Australia. They started off in sheet music, actually selling musical sheets, and then went into a few lines of business, including selling some musical instruments, and most famous for what they did in music publishing, where they backed people like AC/DC and the Easy Beats. In 2016, they actually made the decision to sell most of their music publishing business, but decided a few things. So to stay in business as a family, to keep backing Australian and New Zealand pioneers, though they might have gone from strumming a guitar to strumming some keyboards, and to have a positive impact, but make that a bit more explicit, so not just implicit. And that had a lot of ramifications of the way Alberts does business. So we moved pretty much every asset to a no harm. So some families and high net worths do sort of an ESG screen. Some go like deeper and make sure that there's no actual underlying assets that are causing harm. Then also looked at ways to do good more explicitly. So set up the Tony Foundation. We're a B Corp ourselves, so we got B Corp certified. And the part which I'm most involved in is the direct impact part. So we set up a fund called Albert Impact Ventures. And we do direct investments into really early stage businesses that are aligned with 4 themes which we feel very passionately about. So one of them is the environment and sustainability, which I'm sure we're going to talk about a lot within that is obviously the ad tech space. One of them's mental health and well-being. One of them's, of course, arts, music and entertainment, because we believe in a vibrant culture. And the last one is equality, with an initial focus on gender. So within that, we look for businesses where impact and commercial returns are tied at the hip. So the more commercially successful you are, the greater the impact will be. That way there's never really a compromise. And we are expecting these businesses to be able to deliver very strong commercial returns. We do not see this as a concession. And in particular, there's a lot of reasons to believe that. So for example, you might have noticed that there's a great resignation and that Gen Z is looking for work with purpose. So some of our emerging best talent is only going to work for businesses which are actually trying to make the world better. And the talent and the people within an organization is sort of what determines the success. So that's a little bit about how we think about impact and why we think it'll actually outperform over the long term.
Yep. Thank you, Lisa. That was quite impactful there. Obviously, great to know about the history as well and the focus. And it really resonated well, the for purpose, any organization, whether it's startup or even from investment perspective, for a purpose is really a strong driver there. Thank you, Lisa, for that intro there. Cal, if I can get you to, you've been championing an amazing organization, AgTech space. If you want to introduce Beanstalk a little bit more and about your program and how much of a focus you have on ESG.
Sure. Yeah, thank you. So I'm Cal Archibald. I'm a director at Beanstalk. And first of all, I'll tell you the kind of, I guess, the vision for Beanstalk and what we believe. And fundamentally, we think that agriculture can be a leading force for good in the world. And so that's kind of what everything we do comes back to. And so what do we mean by this? Basically, we actually think that, as many other people do, that the days of trying to do less harm with agriculture are behind us, and the future is moving towards a world where actually, we can do amazing things with the environment and socially in smallholder farmer communities across Asia, as well as looking at some of the big climate challenges around water, climate resiliency, and carbon. All of this, a lot of it can come back to agriculture, and we now have the skills and the technology and the tools and the want to translate agriculture into this new world where it's actually a leading force for good. So everything we do comes back to that, and call it ESG, but we think about it through an impact lens. And so to achieve this, we work with kind of 3 main groups. We work with investors who are investing into early stage ag tech companies and agri-food companies, and help them to think through what does it look like to invest into the sector, and where are the opportunities, and how to make sense of what is a really diverse and kind of complex space. We also work with a whole bunch of startups and sort of get in the trenches with them and work with them around go-to-market strategy and looking to expand into new markets and also getting ready for sort of investment readiness. And then finally, where we spend a fair bit of our time is really with sort of large agribusiness corporates and help them to think through how do we develop a roadmap for adopting new technologies, how do we scout for technology outside of ag to come and solve our problems within agriculture, and how do we actually leverage the amazing innovation and R&D that's happening around the world and bring that into our business in a really considered way, rather than forcing our R&D team to have to solve every problem that we've got. So. That's kind of how we think through.
Thank you. Amazing work that you do, and amazing vision and drive there as well. I think agri-tech definitely more and more is embracing and also even mandating ESG conformance. So good to see. I mean, we've had blockchain from really driving the farm to fork concept, but again, ESG conformance right through the whole farm to fork is definitely something which organization like you help us drive as well. So well done, and look forward to hearing more from you. Matthew, if I can get you to come in and share your perspective from Tenacious Ventures, how much of a focus you have on ESG and what are the things that you look for as an organization?
Yeah, great. Thanks, Irfan. Hey, everyone. Matthew Pryor from Tenacious Ventures. We are an early stage venture firm, so we manage money on behalf of a significant number of wholesale investors. And the role that we play is as a sector-specific early-stage investor. We're identifying high-potential companies who are delivering solutions at what we call the intersection of digitally native agriculture and climate solutions. So, to Lisa and Cal's point, we firmly believe that a significant amount of ecological sustainability transformation is going to come from the agri-food sector. If you think about just Australia, half of the landmass area and 70% of the available water is involved in agricultural production. So if we're looking at ecological sustainability as an outcome, we have to have agriculture and the food system being a big part of that. And so our job is, as a sector-specific investor, to kind of understand a lot about where all the problems are, be deeply connected to the very early stage parts of the ecosystem and identify high potential, globally relevant startups to invest in what we call a kind of high conviction, high support model. So we're pretty hands-on, and they are creating pathways to, lower intensity production, to, more soil health focus, many different transition pathways to move both the Australian and ultimately the global food system to kind of long-term sustainability footing. But in a non-concessional way, as Lisa was saying, it is an interesting thing and relevant to people. Talk about ESG in a broad sense, and there are many parts of that are sometimes challenging to deliver economic returns, but I think it's a belief that we all share that agriculture and the food and agri system is unique in that regard, in that it can both deliver economic returns and environmental returns at the same time.
Great ethos there. I think that's something which resonates with a lot of impact investment, having that mix of return on investment, but also the social impact as well. So that's a key driver we are hearing as a theme here. Tim, if I can get you to share your story, your thoughts on, from your organizational perspective, focus on ESG, how important it is.
Yeah, thanks for the opportunity to talk to you today. And Data Farming is a Toowoomba-based ag tech business up in Queensland, and we're sort of working, I guess, at the coalface of actually getting farmers to adopt digital technology. And I guess, it's before we sort of came along in the market 5 years ago, a very small percentage of the farmers actually use sort of digital tools on a daily basis. And now we've reached about 40% of the market in that time. So, the tremendous uptake of technologies really quickly. Obviously, we're in one of those overnight success stories. We're a husband and wife team that's been going in business for 20 years. And taking all that experience and what we're really trying to do is get mass market adoption, because typically agriculture has been really slow to adopt digital technologies. And, that's a really big focus of ours is now, how do we rapidly get people adopting technology? And we've quickly found out that it's not really the farmer's fault the sort of been slow uptake. It's actually been the technology's fault. So, in Australia, we've built pretty ordinary technologies in the past. And if you get that right, adoption will follow very, very quickly. So we too often want to blame the customer for the problem, but in reality, it's not the customer's fault. So, we're sort of now in a position where we've got, the biggest majority of farmers, farmer-facing sort of software available in Australia, and now that's opening up huge opportunities, particularly around just the digital divide between farm and off-farm. There's a real, I call it the digital lock gate. There's a farm gate that's really locked, and the data's not flowing. So we're really trying to help that flow up the food chain. And a key part of that is obviously sustainability. And, we're getting so much interest in that space to help people comply and meet those needs of the marketplace. And it really starts at a field level or a sub-field level. If it's not right at that level, it's definitely not going to be right when you get the end product. So that's sort of where we fit. And it's great to be part of the panel. Thank you.
Great, Tim. I think rightly said that, you have obviously enabled power of digital technologies in AgTech and driving that adoption with the farming community as well. And the power of data is also going to really help us adopt and even report on ESG and, provide those insights as well, which is going to be conforming to the requirements there. So thank you, Tim, for that opening note. If you look at ESG over the last 10, 15 years, it's just accelerating in terms of the noise it's making and the intent and the drive. But I think most important in the last 4 or 5 years, it's really picked up pace quite a bit, right from corporate to startups, Gov, everyone talking about it. There are ESG specific conversations as well. So from your organization perspective, what do you believe that are the key drivers that's actually helping it accelerate in terms of ESG driving not only in AgTech but other industries as well? So what are the key drivers you're thinking which is really enabling all these ecosystem partners to embrace this?
I guess the obvious one is that the Earth's burning down. So,
Yes.
so I think you have to be blind to ignore the floods and fires everywhere.
Yep.
And the alarm bells are singing. So a lot of people are more focused on trying to get there to survive. I think the last 2 years have caused more reflection for people as well in terms of reprioritizing that. To my point before, talent is moving towards impact. We've seen that for Great Resignation. We're seeing that in the new generations coming through. In terms of the market, it's outperformed. I mean, minus the momentary cycle that happened because of Ukraine. Over the long term, that's actually accelerated the transition away from coal and gas. All of those, behemoths and owners of those finite resources have caused horrible pain to people, and people want a distributed grid now. So there's more demand for it. So I think there's quite a few drivers.
Excellent. You want to add to that, Cal?
Yeah, totally agree. And I think we've done quite a bit of work in the looking at sustainability and what it means to consumers and really understanding what's coming down the pipeline. And one of the really interesting things is that the immediate need for agri-producers is not necessarily to appeal to the consumer, the end person who puts it in their mouth. It's actually the customer, the person who buys it before they distribute it to their, throughout their retail stores in Japan or in, the UK or across Australia. And I think that's the canary in the coal mine. It's actually really about market access and saying, if we are going to be able to export our produce internationally, and we do export, 60, 70% of what we grow, then we need to be able to tell Tesco's in the UK exactly how we produce this food and, under what conditions it was grown, and there's a huge piece there. I think that's the first step. The next thing to come is, as we've talked a lot about sort of blockchain and Web3 at this conference in particular, but that's the next thing coming down the pipeline, where there's full visibility through the supply chain, where a customer anywhere around the world can have a look at exactly where their food comes from and how it was grown and that sort of thing. And that's all coming.
So are some of your startups already looking to adopt that and even showcase that as well in your organization, yeah?
Yeah, absolutely. Yeah, there's a company, actually a West Australia-based company called Origin Plus, who have a really interesting platform that's connecting consumers. They started as a beef exporter, and we're doing a blockchain-backed traceability platform. They recognised pretty quickly that actually, the blockchain didn't necessarily increase premiums in their market, so they built this whole supply chain selling beef to China, and actually, maybe one in 10 people actually verify the blockchain and have a look at it, but then no one comes back and does it again. And so the fact that it was there was kind of enough, and the fact they've bought it through a retailer that was reputable was a proxy for this has been produced in a good way. They've gone the next step and actually developing QR codes so that they can directly engage with their customers and give loyalty at a brand level rather than a retail level. Right. And so it's getting a huge amount of uptake and interest, particularly in Asian markets where, not only do they want to know where their food comes from, but actually for an Australian exporting company, they can reward loyalty to their customers at a customer level, irrelevant of which retailer or how they actually export it.
Great story there. Matthew, if you want to just add to that, any other key drivers which is kind of accelerating this adoption of ESG, and any stories or any of the examples case studies you want to share?
Yeah, I mean, I think the reason we're seeing a difference now is because it actually adds up to money. Historically, it's been the reason why it's a nice to have is because it was largely used in a storytelling sense, and I don't mean that in a insincere way, but it was part of a narrative. There are, we've touched on consumer awareness. People's lives are being touched by the impacts of climate adaptation and climate change, and so when they see that, they're more sensitised to the choices that they're making, and that's a pretty consistent narrative that people have, and therefore influences their purchasing decision. Everyone will have seen Coles, for example, recently making a really significant set of very concrete, very short-term commitments in that regard. So that's one pressure, and it does add up to money. Another one that we haven't really touched on yet, but is increasingly everybody needs capital, and increasingly capital markets are making sure that they hold the people that they lend the money to responsible for any environmental outcome of what they do. And that's being actually codified into a series of task forces. So the task force for nature-related and climate-related financial disclosures. So companies have to make public statements that, what they do doesn't cause environmental harm. And the problem with that is if you make a public statement about something and you can't prove that it's true, then you're significantly exposed in a really material economic way, your share price and all those sorts of things. So that is a really big pressure. And to the discussion so far, all of this data has to come along, because I can't just stand there and wave my hands now, because some short seller is going to say, well, I know you can't prove it, right? And then all of a sudden you've got a monstrous problem on your hands. So these are adding up to be really big, really important stuff. So, companies who are doing, like data farming, everything from what comes from the farm, how it flows through the supply chain, how it integrates with enterprise systems, how we can, it can be auditable and verifiable. These are all the investment categories that are really going to help deliver on this. And some of it is technological, some of it is business model different. So like, when Carl's talking about, can I get a premium, or is it about market access? All of these things are really factoring in. And across our portfolio of 11 companies, there are companies sort of really right across that range of better production systems, lower chemical input to production, but they all kind of stack up, because eventually it has to get to the end where someone can say, okay, I actually want to know in more detail. I don't want to just see that it's organic or something that's sort of one big chunk. I want to get down and know in detail, that there are no chemicals involved, that this was all biological, or it was all whatever, conformant with whatever their personal perspective is. So massive opportunity area, so much great technology to be invested in.
Great insight shared, and I think there's a lot of data play as well, which comes in really handy. Tim, have you seen greater drive and interest in terms of ESG and conformance from some of the buyers or people who are consuming your technology, or even the farming community that you work with as well in terms of conformance there?
Absolutely. Yeah, so beyond the consumer, which has been well mentioned, also the biodiesel market has driven a lot of change in Australia. So almost, vast majority of canola that's exported is heading to Europe for biodiesel. So those ISCC compliance requirements are needed for that. So that's been, in the market for several years. And now that's moving very quickly into barley for beer. And, it'll be one product after another that will be a key requirement to enter those markets. So, that's been going on for quite some time. And I must say too, there is a genuine movement in agriculture, in farming, to actually, help be part of the solution here. So there is a drive from the farming community, and there's a few that probably do stick their head in the sand still, but that's like all people in the world. There's all bits of each, but certainly farmers are at the real front end. Their climate, climate's affecting them on a daily basis, and so they're very willing to help make this change because they're directly impacted. They're mostly outside businesses, right? So rain, floods, droughts, they've been through the whole lot in the last 5 years has been extreme. So they're at the coalface and they really want change as well.
Yep. Okay, Tim, thank you. We've got about just under 6 minutes to go. What I'll do is it'll be a bit of a rapid fire, a couple of questions, and I'll just put the investment hat here. How, in terms of your portfolio of companies, how much of a significance that you give for ESG conformance? What are the critical elements that you look for as part of your investments? How much of significance you give and for purpose as you touched on?
Yeah, so I think it's just worth highlighting that there's a difference between ESG and impact.
Yep.
So ESG is when you're doing lots of governance checks. It's commonly used in the public markets, and you're making sure that sort of the I's are dotted, the T's are crossed, and there's proper governance processes in place. At Albert Impact Ventures, we look for impact, so things which are actually actively making the world better. That's not necessarily true in ESG. For example, you could have a mining company, which is mining coal, but performs well in ESG. So, in a way, it's making the world worse because it's digging up dirt, but it might be digging up dirt better and cleaner than all of its peers. So ESG, they'll rank well. Whereas in an impact perspective, it will not, because you're looking to invest in things that are trying to make the world better. So we take that impact lens and we look for businesses who, the more commercially successful they are, the bigger the impact they'll have. I'll give an example to illustrate. So one company we've invested in the ag tech space is one called Ulu. It's based outside of Perth. And what they do is they take seaweed and they turn that into plastic. So it's actually a carbon negative process and it reduces plastic waste all around. So the more product they sell, the more carbon they remove and the more waste that's removed. So that's an example of how we look at impact.
That's great, Lisa there. Cal, if you can come in and share some thoughts of how you encourage your ecosystem of companies to do more and make them more conscious about ESG and conformance there.
Yeah, sure. So obviously we work with a number of startups, but I'd love to pick up on something that Tim mentioned before, which is really around the big ag companies using their data in a much better way these days. And it's actually a double win, because what we see is that we will work with lots of, say, big horticulture growers or big beef producers who are looking at, how do I get my arms around my operation? I've got 10 properties and I want to pull data from, my walkover weigh scales on all of these different properties and then integrate that with my genetics program and integrate that all the way through to the, the kill sheets I'm getting back from an abattoir. Or a pack house on an orchard, and it's, we're operating at such a scale that we actually now need to be able to pull this data together and make meaningful decisions out of it. So that's something we work with companies on the journey to help, get the right ag tech in place and get the right systems and processes in place, and then ultimately have, dashboards that can help them make the better decisions. And then once they've gone through this journey, or as they go through this journey, they realise that all of that infrastructure and thinking and process is actually everything that they need to start on their sort of sustainability strategy and put a carbon baseline at the start of it, and then as they improve, a lot of the reporting that flows in behind it leverages all this infrastructure that's already there, helping them make better decisions as a business. So very complementary in terms of.
Yeah, it looks like some amazing work there. I mean, I think I would love to take a cue on that for some of the international markets we are looking at. Matthew, if you can chime in,
Sure. Yeah,
what are you
just
doing
quickly,
for, and how important is ESG for your investment?
Yeah, so our investors, give us their money to manage because
Yep.
we want to be able to deliver impact and return in equal measure. Now, that's specifically sustainability in the agri-food system. A good example of that would be, so fertiliser inputs are a significant part of the emissions profile of food. The Haber-Bosch process, which is the industrial process that produces nitrogen fertilisers, is accountable for roughly 3% of global emissions. We invested in a very early stage company called Jupiter Ionics that is a spin out from Monash University, who basically can create ammonia, which is a common input for a lot of agriculture, from sunlight, air and water, basically. Amazing technology, but super early, and so it's really that role of sort of being able to understand a pretty complex environment, that early stage investing with the high support to sort of get that company to where it can actually deliver, in this case, what could truly be global impact. So that's a pretty well encapsulated story, I would say.
Excellent story there. Tim, if I can get you to come in from an ESG perspective, how are you driving this consciously with your ecosystem there?
The good thing about agriculture is that, if you increase productivity and increase efficiency, it's always having a triple bottom line impact. So, productivity gains are good for food security and growing more food. We do that more efficiently. Therefore, we are, saving money or making more money per unit input. But that's also having massive impacts on reduction in greenhouse gases. So our variable rate technology for nitrogen, for example, is applying the right product at the right place at the right time. Well, that's good for the efficiency of use of that product, but it's also minimising the emissions. So all of these things always, when we have a triple bottom line impact like that, you'll get uptake a lot quicker. So and many examples in agriculture will show that. So good sustainable practice leads to increasing, triple bottom line benefits. So it's a great story.
I think I love that triple bottom line, terminology there, which is very corporate-y, but definitely I think that's being embraced across board. In fact, I use a term, and which has been very often used in India as well, Indian parlance, not just ROI, but they also call the roti, which is like the bread we use, but it's the return on time invested and the social impact as well. So definitely that's something which resonates. We're just out of time here. If we can take a couple of questions, if I may, from the floor. Otherwise, we'll call it a wrap, and then you obviously will have an opportunity to discuss further as well. A couple of questions from the floor, please.
Where do you think Australia sits on ESG compared to other developed countries?
We're really behind.
Yeah, although I'd say, I mean, moving quickly, like the conversations, I imagine you're the same. In the last 12 to 18 months, the narrative in the boardrooms of the people who are at the end of the, who closer to retail, like that's moving very, very quickly. And so I think, yes, we're starting from a fair way back, but we're pretty optimistic about the pace of change that's coming now.
I think I was approached by a large corporate group. They wanted to collect ESG data, and they're just running surveys. So the data collection, then assimilation, crystallization, that's taking too long. I mean, so more we can automate that data collection using smart sensors. And different industries may drive different level of adoption, but I think a lot of catch-up to be played here now for Australia. But right on the right track as well as to accelerate, I suppose, yeah. Any more questions from the floor? Okay, we'll wrap it up on that note. Again, thank you again to the elite panelists. Please, round of applause to the panelists. And please do stick around to stay connected as well. And do check out on LinkedIn Venture Capital and reach out to us as well. Thank you again. Thank you.